Hello, this is Coach Mike from WinningsTockCoach.com. Gonna start out my weekly market overview video for the upcoming week. It's gonna begin 8/18/2014. Anyway, fairly decent week on the S&P 500. If you've been watching my market overview videos, you see that we held that bounce point that I've been calling out for about 3-4 weeks. Got right down to it. Coach's roster members jumped right on it, made some big trades. I was really happy with our performance overall on that bounce. When the media tried to instill fear, Coach Mike was buying and was making money. So really nice to have caught that bounce just through proper planning. You know, that's a real value of these market overview videos and having an understanding of it. Anyway, I want to start out with a simple observation, looking at a weekly chart here of the SPX. That's your S&P 500 index. Anyway, this is going to be very simple. So, you know, very simple observation. But starting out on the weekly chart, I want you to notice that following each pullback, and I'm not just talking red candle, I'm talking red candle with continuation downwards, the next up sequence made a new market high each time. You know, we're going to start here, October 24th, 2011. We had a dip with a higher low. The run went up to make a higher high. We had a dip with a higher low. The next run went up to make a higher high. So on, so forth, so on, so forth. Each and every time thus far. So that brings me to where that's relevant here. Well, at this point in time, what we need to see is continuation that makes a higher high. That'll show us the markets are still showing strength. I do still want to watch this target area 1970.39. That's going to be important to me. But overall, just in the very simple observation, if the market fails to make a higher high before it begins another pullback sequence, that is going to be your telltale sign that the trend has changed. Nice, pretty visual uptrend that has made higher highs on every sequence. If you begin to see the weekly candle and continuation on a pullback that did not lead or did not come from a higher high, that's when you're going to have to start to kind of believe some of the bears out there that say, hey, this market is overvalued, there's no reason for it to run, it's running on super low volume anyway, a pullback is healthy. You know, I'm not a bear, I'm not a bull, I'm just kind of a market neutral. I trade what the charts do. But I know we haven't seen a lower high in quite some time, and that's what we're going to want to focus on this next week, really, is if we're able to break the high. I'm going to break the SPX chart down to a daily chart now, where each candle equals 1 day. And you'll see that Fibonacci target area 1908.47, it went just a little bit below it, but that's where we caught it for our buys. And we weren't buying the S&P 500, we were buying S&P 500 stocks that all seemed to bounce off that same time. Anyway, what we got to look for here, Friday, odd day. Everything started off great on Friday. News came out from, you know, one of the Ukraine ministers of defense, I believe it was, that they had destroyed a Russian military brigade or something like that. Market fell real hard. Then there were some reports that said that might be false, so the market started to rise throughout the rest of the day. NASDAQ actually ended up closing green for the day, which means above the prior day's close, not necessarily the color of the daily candle. But it did leave us with a little bit of concern because of what it went to. You see, the high actually went to the highs from where we opened a couple weeks ago when the market fell pretty heavily. And regardless of what the news is or whether it's true or not, when we're left looking at the chart, we actually see that we came up to a technical resistance point. And if you simply look at the candle and exclude the news or anything else, technically speaking, this chart came up to a resistance point and fell from it. So even though on a nice little run from this bottom bounce, we could come down a ways and still be okay on long entries. You know, we could gladly give up a 50% retracement of this up move and it'd still be okay. We just need to be aware of the potential and what to look for on that. So we're going to want to be looking around 1935 or so, 1933 to 1936 really, and the ability of the S&P 500 to stay above that in the upcoming week. If not, we could at least come down and make a double bottom or hit that other sequence point, that 1877.43, which at that time, even though I believe we'd bounce up off of it, we would have a clear indication of a new trend on the S&P 500. Some of the concerns I have on the S&P 500, which is the major index that I use personally, actually come from the Dow Jones Industrial Average chart. I want you to notice on my chart, I marked that prior pullback that we just bounced off of. You notice I had a trend line bounce just right off that trend line. Some great trades with it. There's a general rule in trading called the 50% rule, where the definition of that rule is any stock that gives up more than 50% of a move just made that is showing weakness towards the direction of that move. What that means is if this candle would have closed up above this 50% line, we would then say even if it pulls back, we expect that it will show weakness in the downwards direction and not make a lower low. That would be the expectation we could have. But any stock that doesn't give up more than 50% as a retracement of a move just made is still showing strength in that direction. What concerns me there is we came up to our 50% line and we pulled back from it. Now, we're going to need the continuation into Monday to really see whether the DJI pulls back from here. And if it does, you know, I've got this Fibonacci 15904 target area. But if we give up anything shy of this double bottom area, if we make any lower low, we are going to want to shift our focus from long entries over a longer duration to short entries over a longer duration. So that's what we need to be looking for. That's probably the most important thing, in my opinion, to be looking for in the upcoming week. Because even though the Dow Jones Industrial Average is only a composite of 30 stocks, it's 30 of they call them the blue chip stocks, the well-known names that have a lot of control over the market in general. Plus, when the news talks about stuff, they talk about the Dow Jones Industrial Average as if that's the markets, when in reality, it's 30 stocks. But if we were going to talk about an index to be looking for trades in the upcoming week, I would have to say that we would need to see the DJI break above that 50% retracement before we look at long entries in the DJI. But if the markets start out sour on Monday into the red side, the DJI could actually be the one best set to give us higher probability trades to the short side. looking over now at the RUT, the Russell 2000 Small Cap Index, it's actually performed really well. And even Friday, I mean, it came out of the gates, a big gap up. Markets kind of turned to the downside. It fell really hard. And it actually made up half, right at half, of the move it had fallen to. Because of the fact that for the individual day, it was right at the 50% line where it closed from high to low, we're really going to need to see what direction it goes in the morning on Monday, a positive move from that 50% or a negative move, to determine potential trades in the small caps, because what we do still have here is a lower high in this sequence that followed a lower low. And remember, as long as we're making lower lows, we have to start anticipating lower highs. And yes, eventually that trend will be broken, and one time it will make a higher high or a higher low. The higher probability trades come once the new sequence has started. And where we're at right now, we have still a lower high following a lower low. And it would really be the next low in the sequence, and whether it was higher or not, that we'd be looking at for long entries in small caps. When in fact that it's so long as we're making lower highs and lower lows, we would be looking at small caps for short opportunities, whereas we would sell them or cover on a bounce and wait until the next opportunity, that next high anticipating a lower high, for an entry to the short side. What that means is that the way this chart is right now, Friday may have been the best short entry, moving forward to a potential target of 1095.26 on the Russell 2000. Finally, I want to talk about the COMP chart. That's your NASDAQ composite chart. We talked last week about how it could be setting up to give another momentum play, but we needed to wait for a consolidation range break. I marked both of these lines on the chart, showed you that the high line would be where a break above that, just like when we had done it a few weeks ago, actually it's about 2 months ago now, where we played this consolidation range break for momentum trades. We would then need a break above this line to look towards the NASDAQ, the technology names, for momentum trades. And I believe that a lot of their charts are set up right to that point where come Monday, Tuesday, if we see those breaks, they're set up perfectly for momentum trades and ones that could be quite profitable. The point I want to make is it hasn't done it yet. See, on the weekly chart, it looks really good here. Hey, nice green, solid green candle. But sometimes taking that preemptive move, I'll buy now because it might go up above here, sometimes that has you looking too much at the potential above the line and not what happens at the line as a resistance point. So I'm going to move this over to a daily chart and I want to show you those same lines. And if you look at what happened on the comp chart on Friday, we actually had a nice rise in this horizontal channel, and we triple topped, 3 tops at the same point, and pulled back from it. And this is why I said it's important to let it break that line first, because you see what the charts told you is I didn't want to break it this time, I didn't want to break it this time. Don't assume I'm going to break it this time unless I do. In fact, again, just like one could have gone short here, definitely had confirmation to go short here, Friday again could have actually been a good short entry. Now for me personally, I would wait to see the continuation. If Monday continues downwards, that would be my short entry. But also understand that this horizontal line that came from our weekly chart, and that's why you have some little aggressions below or above it over here on the daily chart. But from our weekly chart, based on the closes of the weekly, this bottom line here would then become your support, whereas you couldn't really expect anything below it until it breaks through that. The way I like to trade consolidation patterns, to be honest, is I know that in consolidation you're going to build strength as a support or resistance. And therefore it's not about always buying the lowest price possible in any direction you're going. It's about making the highest probability trade. As this consolidates horizontally between these 2 points, it is building a volume profile of strength. And then once it breaks above the line or even breaks below this bottom line, you will have greater strength in that direction. So the way I like to trade these horizontal consolidation channels is actually to wait for the break above or below, because you generally get momentum and a very good return when doing so. Whereas you can be a little bit slower and choppier while trading between a horizontal channel. Remember, most things don't need a reason to trade between support and resistance. That means they can go up and down for no reason at all. It's breaking a resistance point or failing a support point that generally there is a reason provided for. At this point in time, you've hit resistance and pulled back, and you've got a ways to support. Whereas if you simply wait for a break above the line, your resistance will become that level of support, and you'll be in what's called blue sky territory, where there is no resistance because we haven't been up here before. This is Coach Mike from WinningStockCoach.com, and trying to encourage you to have a plan for your trade, understand how the indices can affect your stock, know your stock's beta value. That beta will tell you how it trades in relation to the indices. And best of luck in the upcoming week. God bless.